This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet MicroCap, please take 2 seconds and give us 5 stars on Spotify or Apple. This helps with the search engines so that more folks can also discover and engage with all things microcap stocks. My guest on the show today is Sebastian Krog, founder and editor of Treasure Hunting Newsletter on Substack. We actually met a few years ago at our conference in Vegas, the Planet MicroCap Showcase, where he made the long trip from Europe to join us. I invited him on the podcast because he's recently started his Substack, the Treasure Hunting Newsletter, and he's actively getting out there sharing his investing process, philosophy, and a few microcap investing theses. We talk about all of this today and more. Thank you again for tuning in to the Planet MicroCap Podcast, and please enjoy my conversation with Sebastian Krog. Sebastian, thank you for joining me today. How are you doing?
Thanks for inviting me, Bobby. I'm excited to be here.
Absolutely. It's great to have you, man. I mean, look, when I saw that you've recently started, because I've known you since 2022, when you came to our conference in Vegas and you're like, yeah, man, I'm here all the way from Germany. I'm like, what? You came to this? Thank you. And we got to hang out a little bit, and I really enjoyed getting to know you there. But you kind of have always kind of been a little bit under the radar, and now you've recently launched this new newsletter called the Treasure Hunting Newsletter, where you're sharing your investing process, your ideas. Of course, very microcap centric, which we all love. And so so I figured it'd be cool to have you on to just jam a little bit about, why you decided to become a little bit more public in sharing your ideas and your process, as well as, your investable universe, how you define your microcap strategy, all that good jazz. So to start us off, for those that maybe are new to following you or a new subscriber or evaluating subscribing to your newsletter, give us a little bit about your background and then why you wanted to become more public and launch your Substack.
Yeah, sure. So, as you mentioned, I'm from Germany, and my background has nothing to do with finance at all. Even though I started investing quite early when I was early for German standards. I sometimes see people on your podcast. Yeah, I started when I was 12 or something, and I think we don't have that. Such a strong culture in Germany to invest in the stock market. But I had to convince my parents, though, to open a brokerage account because I was like 17 when I first got cared about investing, let's say, but started out with just focusing on index funds, very, I would say, very reasonable, very reasonable approach. Eventually got also a bit into the big caps like Facebook. I actually bought Tesla back then as well, but I think I put in like maybe it was like 100 euros. So, but it was my first 10 mega, even though. But I wouldn't count that because it was more like luck. I had no idea what I was doing.
A win's a win still at that age, right? Like that'll keep you there.
Yeah, and but quickly figured that okay, I was 17 at that time, so still going to school, and I obviously had not the source of income. So investing didn't make a lot of sense if you have maybe like $50 each month. So I figured, okay, well, first I should probably focus on earning more money, and that's why I got into the whole entrepreneurship, online marketing scene, let's say. So I eventually, while then after school going to university, started my own business. I grew that, still running the marketing agency now for 4 years in Germany. And have been focusing on that for until 2022, let's say, when I started to shift my attention also to investing again because I had more money, started with where I left off. So with the big caps, with index funds. Read a book by Peter Lynch, as probably almost everybody who was on the podcast did. And I remember I mean, I like books, but I'm not like a big reader, but I read it in, I think, like 1 or 2 days. So it really fascinated me. It's also very well written, very easy to read, I think. So that was when I, yeah, kind of been hooked for the second time into investing, but then with more money to invest in. So and then eventually I stumbled across the book, I think 100 Baggers, where he basically reasoned that, look, if you want to have those big winners, you have to look for smaller companies. And that was what really led me into microcaps. And eventually, during that time, I also stumbled up across Monish Pabrai, who always gave these interviews and saying, hey, look what Buffett did earlier. And then I came across the speech, which I recently shared because he gave the same answer like almost every year, that he would focus on microcaps. And that was what ultimately led me to microcaps. And then in 2022, when I just started my journey into microcaps, also to Vegas, which I, by the way, combined with the trip to Omaha because it was, I think, like 2 days after the annual meeting. So
Great
yeah, that was.
idea. I think the plane from Omaha this year was also totally packed on Thursday night with all Vegas
Yeah.
attendees. Anyway, sorry.
Yeah, no, it's. I think if you keep it like this, it's always a great trip. I can recommend everybody who goes to Omaha also to step by in Vegas. Um, so for your event, obviously. Yeah, so that's basically my journey. What got me into microcap investing, and so I would say since 2022, I think I bought my first microcap maybe in 2021. So I'm fairly new, but yeah, also currently fairly fully merged into the scene, let's say.
Absolutely. Well, it's the reason I love talking to folks like you also is because, it's like when you talk to like a lawyer just out of law school or a doctor just out of medical school. You're as in it as you possibly can be because you're as excited as I mean, don't get me wrong. The best of the best are as excited about microcap investing now as they, are maybe 20 years into your career. And those are some of the best investors out there for sure, for love of the game, all that stuff. But, there's something to be said is like when you're fresh out, like fresh in it, because it's all new and exciting. And you're reading materials that, maybe some of these folks read 10, 12 years ago that you're like, oh yeah, I forgot about it. Like that's the good stuff. That's fun. That brings us all then to your new Substack, Treasure Hunting. I would imagine you've gained a nice little following already. I mean, I've been reading it pretty religiously now since you launched it. You've gained a little bit of a following on social as well as a result. So what was your thought process with launching that and sharing that? And did you have any reservations? Be like, hey, I am relatively new in microcap investing. Should I put this out there? I'd love to hear your thoughts there.
Yeah, so I actually started the blog in 2022, but I never really published anything. So I think I published like one write-up, which about Parks America. Full disclosure, I'm not a shareholder anymore, which also got me into the microcap club. So I had like one write-up there, but didn't do anything. And then yeah, in 2023, later in 2023, I started thought, okay, well, I like maybe at that time I had 2 or 3 articles, but I always got like good feedback even on the Parks America write up, despite like it didn't work out. But the feedback was pretty good. So I figured,
We can dig more into that story a little bit later, right? I mean, Parks
yeah,
America.
yeah, it's
Anyways, I got to get
yeah,
Andrew and Jeff on at some point to talk about that because
yeah,
that's very interesting. But anyways, sorry.
definitely. Um, so at least I had a gift to pick interesting stocks. Yeah. No, but yeah, I actually got almost always good feedback, and yeah, so just thought, okay, well, I'm just gonna let's see what happens if I write regularly. So I then put out another write-up at the end of October, and then beginning this year, I said, okay, well, I'm just okay. I write bi-weekly, or two articles a month. Because then I'm a little bit more flexible, and I've been doing that since starting this year, and obviously and still the feedback is very good. I appreciate that you read also my blog. So it was just let's see what happens, and until the feedback is good, continue. And so far, it brought me to this point, and I really enjoy it because not only I enjoy writing, I also it helps me to dig a little bit deeper into a company, because I mean, you always have not the fear, but you like before you publish something, you have your thoughts about, okay, what will others think about it if I publish this? What will they maybe ask me? So I don't look stupid that I maybe missed a point or something. So I think it really forces you to double check on your thesis and on a lot of stuff, which I really like. And also, I mean, it just helps you to connect to people. Several people, including you now, have reached out to me, and I think it's an awesome community. I really appreciate getting to know people, and so it has really been a win-win for me so far.
Very cool. Yeah, no, look, I just hope you remember the little guy when you start your own podcast one day, or when you're on CNBC after picking the next big winner and all this. But so let's talk now about, what your criteria are for when you're looking at microcaps. So, in a nutshell, what does your investable universe really look like, and how do you define your own personal approach to microcap investing?
Yeah. When I started in microcap investing, there was obviously probably the most common mentions, mostly named stock was Liat. So I also invested in Liat in 2021, I guess, at I think, let's say maybe $20. You can look at the share price now. I think it's at 7. So basically, my current approach is doing the opposite of what I did with Liat back then, which basically, I mean, well, I stick to microcaps. I like stuff below 100 million market cap, and I usually look for some kind of change. So I would, maybe you can say I'm a kind of a inflection investor. Look for an inflection point. So that can be anything from a new product, a new CEO with a different capital allocation strategy. But it can also sometimes be if you have, I mean, sometimes if you have some cyclical industries, and there's going to be maybe the on the supply side, there will be maybe less supply. Demand keeps stable. So there's maybe a competitor who liquidates the company, and so kind of change which will whether the company will benefit from, and that combined with obviously a cheap valuation and a good management team is basically what I look for.
Very good. Yeah, nope, that sounds pretty that sounds like the main standard stuff. One, to kind of cull down your list of, okay, these, I think I saw in one of your articles, I remember it was like, I go through all the file, or go through most of the companies, 80% or no, 20%, there's something about it that might, or 18%, I think you said. 18% is something that, I'm worth digging into further. And then the 2% is where you get the real interesting stuff. So amongst, let's say, even just that 18%, what is it about when you're digging through the filings, or you're hearing an interview that maybe we've done or something like that? What is it that more often than not interests you to say, all right, I'm going to dig a little deeper?
Yeah, as I said, it's kind of to see, okay, this business is kind of transforming. So first of all, I obviously want to come from a kind of a stable base. So obviously needs to be business that I think I can understand fairly well. Maybe we have a history of revenues and earnings where I can look back into the past and see, okay, what what did this business do like 10 years ago, for example? And this combined with, okay, now usually it's like, in a lot of cases, it's not that obvious. So sometimes you have to look through earnings calls, the transcripts of the earnings calls, which I'm a huge fan, or commentary on the earnings releases, because then they drop like a little sentence, like whatever. We launch a new product, and we are very happy about how it was received so far. Or maybe we I don't know, we changed our capital allocation strategy and are now focusing more on this product line. Or maybe we sold a division. Kind of something where you can see, okay, there's some change going on, and then you obviously need to connect the dots and make your assumption on what this company will look like, because I think it's you always have to ask yourself, okay, if I buy this company now, what do I see that somebody who I can sell my stock to in maybe 2 years, 1 year, or 3 years will see then? So obviously it's not 100% accurate, and sometimes you make mistakes. That's part of the game. But I think it's very, or at least my strategy, to try to see something now, or see a pattern, how this company could look like in 2 years, that is maybe not screenable yet. So because it's maybe not like, if you go just on the income statement, it says, okay, they're not profitable, for example, but you can kind of work your way through, this will become a profitable company once XYZ happens, for example.
You said something that you got my brain going a little bit more, and it's kind of a thought process that I think about a lot, because I've been interviewing some of these companies for, a perfect example, one of your top conviction idea, IVFH, right? Not a shareholder, but like, I've been interviewing them for what, 8, 9, 10 years, right? And the thing that you said, something that I think kind of cuts at the heart of what I think is very appropriate if you really are digging deeper into the psyche of a microcap investor, and that's the idea of company transformation, right? We do get new ideas every once in a while, but usually most ilk I know aren't, just throwing a couple shekels at a new idea. You kind of waiting for it to mature, see how they are in public markets, just a couple quarters, and see what's going on there. So for the most part, we're looking at companies that have been public for, sometimes 5, 10, 15 what, Richardson Electronics, public forever, right? Not a shareholder again. So you have to constantly think to yourself, what about this new potential transformation of this company is now maybe potentially interesting, or at the end, other side is like, oh, they're not transforming for the better. So let's jam on that a little bit more. What type, you kind of got into it, how a lot of people use like inflection point investing and whatnot, catalytic investing, stuff like that. But it all kind of falls under the umbrella of transformation, right? So love to hear your thoughts there about how you might think about that mental model, like when transformations that are interesting to you, so, and if you want to use IVFH as an example, I think that would actually be a great one.
No, a perfect point. I think IVFH, that's why it's my highest conviction idea. I own shares, full disclosure, and it's my biggest position, because it probably demonstrate everything I'm looking for. So as you said, it's a company, and I actually joked on Twitter, I think the one underrated way to get new ideas is to look at like stuff that has been profiled like 10 years ago, and then kind of forgot, as you said, because I think IVFH was pretty, I haven't been around then, but I think it was quite popular amongst microcap investors in 2012, 2013, 14-ish. And what happened there is it has always been a food distribution business. They had their warehouse in Chicago, where they do classical food distribution, and then they always had this drop shipping kind of platform aspect where they only had one client, which was US Foods. So especially on the drop shipping business, they have like very, very good margins. And even on the normal food distributions, you have maybe like 6 or 8% margin. But in overall, they had 10% margins because the drop shipping business was or still so profitable. The old management, what they did was basically diversifying or diversification. So they took the cash they generated with those two profitable lines, well, the B2B part, and then they acquired B2C companies. They got into this whole e-commerce business, and they burned a lot of cash. I think they doubled the share count in 10 years or 8 years, whatever, and went from basically doing 5 million EBITDA to minus 3 million or something like that on top of that. So it was really a little bit mismanaged, to be honest. And then you could actually already see, which is sometimes the first sign for change, that those activists got into the board with Papas and Graham, which are very well known and respective investors. I think they got into the board in 2022. And then in 2023, a new CEO took over. He was previously working for Kroger and Walmart, overseeing their 10 billion e-commerce division as vice president. So he's let's say, a heavy hitter in definitely used to working with in a bigger company, and probably also earning more money than he did when he joined IVFH. And you could perfectly see, like in the second or third earnings call he did, where first of all he reintroduced earnings calls, which is always a great sign, and then he talked about, hey, look, we lost money on the e-commerce part. That was basically the reason why we lost money the last 5 years or something, and we are investigating whether we can turn it profitable. If not, he said, basically we're going to shut it down, and we're going to sell all the assets, because they had 80% of the assets were attributed to the money losing business. So they still have a huge warehouse which they are trying to sell, another one which they already sold, and they used those warehouses for the e-commerce part, which was the money losing part. And eventually they sold off or shut down the everything that was basically money losing, and are now in the process of focusing and also trying to grow the profitable B2B segment. They recently just signed a new client for the drop shipping aspect, which again has the highest margin of all. So you have really this classical example of, like, first of all, change in the management, which is a lot of times the first step, because I think it's hard for people to change, to be honest. Like, it's like the same with value investing. If either you get it right away, or you probably won't get it your whole life. So the guy who maybe likes whatever, or doesn't get capital allocation, let's say, without any judgment to any CEO, probably I would be skeptical that he one day wakes up and thinks, oh, well, now I got it. Can happen, but just my opinion. So you have this change in management, and therefore change in capital allocation. You had always this profitable, very, very good, very sticky, high margin business. And then the incoming change in capital allocation. And this is also a perfect example where if you go to the financial report, you see, okay, money losing business for like 5 years. But if you dig deeper, you see, okay, they have been profitable, like around 10% margin with the B2B part. And they should be able to do that once the mess is cleared. So this is basically a perfect example of everything I'm looking for.
Absolutely. And thank you for going through that. I was also thinking through like the different types of transformations a company can do and what tends to be more successful than not. And when you already have a quality business, that makes it relatively easy, right? Like,
Yeah.
okay, we can transform management team, maybe capital allocation strategy. Like there's certain things from a corporate level that you can kind of fix, come in and figure out. It's when you're just talking about the quality of the business and having to transform that. If, let's say, the quality has gone down, or you just now have all these massive headwinds that are going to reduce the quality of the business, that's when things get way more difficult, but also can be an opportunity if you're like, hey, if they maybe pivot to this, this could be a more stickier, more high quality business.
Yeah, exactly. That's why I like IVFH, because you have kind of this very, very good business underneath, and then you have also the change and everything I talked to above.
Absolutely. So, going from that, you mentioned PRKA. I mean, it's been getting a lot of headlines, the activist campaign from the Focus Compounding crew and whatnot, which hey, shout out to Andrew and Jeff. Come on, let's talk. That'd be kind of fun. What would you say were some of your main lessons learned? Because you were very open and honest about how, that's what got you on Microcap Club. And then you even put out a post as to why you sold it. What would you say were some of the main lessons learned from that helped steered how you're now thinking about, or how you're thinking about your new investing universe and new ideas springing into the portfolio?
Yeah, it was kind of, I think every mistake I made led me to the principles I have now, because with Park it was, you had always this Georgia Park, which still is very profitable. I think they have like 60% margins. So it's a very, very good business, high margin business. And then you have the two other parks, which are unprofitable. And I was basically, hoping, or basically hoping that they would be able to at least get the newly acquired Texas park, which they acquired in 2022, also at least profitable, to maybe not 60% margin, but let's say 10 or 15% margin. So that was my hope. And the mistake I did was basically, I mean, they had, I think the Texas park was profitable during COVID because they benefited from COVID. So they also had like a little bit of elevated earnings, and they have quite some operational leverage. So at a certain revenue point, the parks become profitable. That's why the other two are not profitable, because they just have too few visitors. And so the mistake I did was, I mean, at the end of the day, it was a classical, what we call value trap, right? You have a great asset, but a bad management team which doesn't do anything to leverage the great asset and get rid of the bad assets. And if you have that kind of combination, you're in something which I think Dave Waters called a someday stock, and that's exactly what Parks has become, right? Because eventually now something happened. But so you have kind of a setup where you're like, okay, something can happen. The problem is, with something can happen, it can take 5 years, it can take 10 years, it can take 15 years. And at the end of the day, you want to achieve a certain IRR. And part of the IRR equation is time. So timing is also a factor in achieving a great return, because if let's say, theoretically speaking, you bought parks for, I think, let's say 30 cents or 50 cents or whatever, and you say, okay, intrinsic value is $1, just to make it simple. So you have like from 50 cents 100% upside. If you need to wait 5 or 10 years to get 100% upside, your IRR is not that great. But if you only need to wait 1 year, because you can see, for example, in comparison to IVFH, you can see, okay, there is this transformation already happening. Yeah, they laid out the plan how they will achieve that. So it's not only hope, it's more of, okay, there's a plan. Now the question is, can they achieve the plan? But it's not, okay, we have this asset and there's actually no plan to get rid of the bad assets and leverage the good assets. So we are kind of in this, okay, maybe something happens. Eventually something did happen with Parks, but it was not foreseeable 1 year ago. And still now, I think the outcome is uncertain.
To say the outcome is uncertain is I think an understatement at this point with everything going on there. But yeah, no, and listen, I think that's great that you gave. That's what I wanted to go into is your two examples of like, all right, how you've evolved to where you got to your highest conviction idea, and then some of the lessons are from, because these are two ideas that have been microcap culty ideas for a while, right? So
Yeah.
so that's great. So I want to actually dig in a little bit more into your idea generation process, how you find some of these overlooked stuff. You actually, in your post on treasure hunting on your Substack, you tagged a nice video that with Paul Andriola and Brandon Mackey. That was like from 2015. Back when Brandon was still working with Paul, and shout out to Brandon, he's still a homie for sure. I actually remember being in the room hearing that presentation, so that's I'm starting to feel kind of Oh, that was 9 years ago now. That's kind of crazy. So I mean, you really simplified it down. It's really quick hitter about, looking at as many companies as possible, keeping track of them, and then of course making your decision. So I mean, let's expand upon each of those maybe just a little bit more, because obviously there's so much nuance when you say look at as many companies as possible. I mean, Paul is famous for him and his team for going through every single CDR filing and trying to find some, overlooked stuff, or, as Maj likes to call it, information arbitrage as well. So for you, I mean, how have you taken some of these principles that I'm sure you've heard over the years, whether it's an interview with me or stuff that they've done independently? How have you taken some of those principles and applied it to your own process?
Yeah, so I don't have a strict process. It's more like all over the place, because I think it, like, ultimately it's like led by curiosity. So it can be like I'm part of the microcap club, where you have a lot of ideas, not only the ones that are like have been profiled in the last week or last month, but you can go back to, as I mentioned, ideas from like 2012 or something, right? And if you, for example, I don't know if you see, let's say, Ian Castle, like the founder of Microcap Club, he also reprofiled IVFH. So I say, okay, maybe he looks at stuff which is similar to what I like to look at. So you can see, okay, what did he bought like 5 years ago? Maybe there's still some potential now in this company because he saw something in there, right? So I think that's a very good hunting ground. And then, yeah, I mean, I also like to go through news releases, press releases on Cedar. I'm obviously on Twitter, X. There are also other good Substacks. Tough, I think you also had on the podcast, right? Where you like
Yep.
put out his Monday, I think Monday Monitor, it's called. I don't know. And yeah, I wish I could give you an answer like, okay, I do this every day for like 30 minutes. I don't know. It's more like sometimes I just think, okay, let's open cedar.com and see, look through every press filing which has been released in the last 5 days. Sometimes it's, okay, let's read press filings on the OTC. Sometimes it's, let's go on Value Investor Club and see if there's any new write-up. Sometimes it's going on Microcap Club. Sometimes it's, okay, well, I wonder what the board members, for example, of Innovation Food Holdings also own in their portfolio. Sometimes it's something stupid as Yahoo Finance. Other people also watch this stock. If you type in user and it gives you a recommendation, and then you click on this one, and then whatever, and then 2 hours later you looked at 30 different companies, for example, and eventually you find something. And sometimes also running screens. And what I like to do though is kind of thinking, okay, how could I have found Innovation Food Holdings? So, okay, I could have found them by maybe looking for companies who reintroduced earnings calls. Is there any way to do that? Maybe I could have found them by looking for companies who transitioned their CEO. So I tried to screen for that or look for that on the press releases. Or maybe I could have found them by looking for companies who, I don't know, maybe sold a division or something. So it's kind of like working your way back from the ideas you like and trying to kind of duplicate them in a certain way. And then I think what is really underestimated is actually keeping track of companies, because as you said, a lot of companies changed. I think another idea for mine is Spar, which I own, and I think Marsh pitched it on the MicroCap Summit in 2012. So that was the first time I heard about it. And
What a callback.
yeah.
Love that.
I mean, it was always cheap, but I never liked their joint venture deal structure. And then I saw this press release that they said their joint venture deal structure. Okay, well, there you go, right? I mean, I obviously did a little bit more research, but it was kind of simple because I was familiar with the company for a year or something. So I think that is very undervalued, to just, because you, as you said, you don't need to find, like, I think if you're in this game for, I mean, I'm not that long into the game, but I already feel like you kind of know a lot of companies, and obviously there's some new ones, but if you just keep track of the ones you know, eventually there will pop up ideas because they all change.
Absolutely. I mean, you said that so perfectly, is that like, as you keep doing this, it's important, just go down each rabbit hole. Go down each rabbit hole, turn over as many rocks as you possibly can. But I think the most important thing that you said there is making sure that you have a process in which you're keeping track of it. Because on one hand, like, some people could hear this and be like, "Oh my gosh, this is like it's like you're going to develop a ADHD disorder from, going nuts and looking at all these different ideas." Because you easily could. Like, I was there, for many years, where I was just like, "Ooh, that's interesting." And then, "Oh, wait, that's really interesting too." But then my problem was always like, I'm not keeping track of it damn thing that I just did, and I forgot. So like that half hour I spent on something else, I completely forgot everything I just looked at over here, so it's about developing more of an efficient tracking process so that you're not, just forgetting not just everything that you looked at that moment or even that day, but so that, and this goes beyond just journaling, like that goes without saying. This is more like hey, these are the 10 stocks I looked at here, or having some kind of process where you are keeping track of it. And there's many different tools out there where you can do that too. So yeah, you hit the nail on the head with that one. So, look, I'd say another thing that I wanted to talk with you about today, again, you're still relatively new in the process, and this idea of turning over as many rocks as possible. Are you, I'm assuming you're not even discerning a little bit in terms of, oh, this is interesting, I'm gonna go. Like sometimes, like some guys like Maj, for instance, he's been doing it for 30 plus years. He could he'll look at one thing, 5 seconds. All right, cool, next. Like, because he's built up that process mentally where, like, all right, I know this is a loser. Like, I don't need to look any further. Okay, this fits a couple things. I'll dig a little deeper from here. So how has that process been for you? Do you feel like the muscle is developing a lot faster than, you even thought it would?
Yeah. Sometimes you get surprised though. I mean, sometimes it's I think every company is different, and sometimes you have also the opposite, where you have maybe and that can also work. I mean, I think that's still the most difficult part, because uh, if you're wrong, it can cost you a lot of money on both sides. Like sometimes you maybe look at the company and they are whatever. Maybe you misjudge something which you think is a red flag. For example, I remember looking at Solitron devices and saying, okay, well, they have only one customer. That's a red flag, right? So I passed on it. But if you dig further, and you may eventually see, okay, well, it's like the relationship is sticky, and it's, even though it's only one customer, they whatever. I'm not too familiar with Saudi, but eventually it worked out, and so I cannot argue about the why it's a positive. But what I wanted to say, I think that's still definitely the most difficult part, because sure, it's a no call strikes game, so no worries if you pass on something, but it hurts, right? I mean, it hurts. So um, yeah, it's difficult to answer, because I think, I mean, the same with Innovation Food Holdings. I think eventually, only if you own a company, you really get to know the company. Like, my understanding now of Innovation Food Holdings is completely deeper or different than it was like in November, because they also had only one customer, like one big customer. But if you really understand it, it actually says a lot about the quality of their dropshipping platform. So, and that's the difficult part, right? You, on the surface, some things look like terrible or like a red flag, and you pass on it. But eventually, if you understand it well, you see, well, that's actually not a red flag. That's maybe some positive, or it's not, at least not concerning for the thesis. So I would say that's definitely the still the most difficult part.
Absolutely. All right, well, Sebastian, we covered already so much, and I got to tell you, I'm very excited to continue to follow along with, reading all your thoughts, and as your process and evolves and your philosophy evolves. So, let's to close this out here. What would you say? Either some advice or if you have another anecdote where you really learned a lot that folks that maybe are just getting started on their microcap journey could maybe take take a little bit away from.
I would say what has that's difficult. I mean, okay, look at as many companies as you can and try to learn from every decision you make. Even for example, because I think so feedback loops are very difficult in investing because you maybe only make so many decisions and they are very long. But try to also learn from, and that's again, like follow a lot of companies because not only look at them, but follow them. Because then you can also learn from companies where you passed and you see how they developed and whether the thesis has played out or not. So I think that's a very important part in decreasing the time of the feedback loops and basically increasing the kind of the shots or the calls you make if you also follow like just as many companies as you can, and then eventually you get quicker to the point where you have kind of this pattern recognition. And I think it's also very important to find your own style, because then you won't die of FOMO, because you can just say, okay, well, congratulations on your winner, but this was not my stock.
Absolutely. All right, that's a perfect place to end it. Sebastian, where can our audience go and find more information on your treasure hunting Substack, as well as follow you on social media?
Yeah, exactly. As you said, I have a Substack called Treasure Hunting. So yeah, feel free to subscribe. I publish deep dives about companies and also follow them with earning commentaries. And you can also follow me on X at Sebastian or at Seb Krog. That's SEBKROG.
Very cool. Well, Sebastian, thank you for joining me today. I really do appreciate it. Good luck. Stay safe. And maybe I'll see you in Vegas in 2025, something like that.
I try to make it, Bobby. I try to make it.
I know. Each year. So really do appreciate it, man. And look forward to having you back on soon.
Yeah, thank you.